If you've ever day traded on a 15-minute chart, you know the feeling of staring at a screen that looks like a panicked heart monitor. The price bounces up 3 pips, drops 5, stalls, and then spikes again. When you're locked into this minute-by-minute view, you develop a zoom-in bias. Every tiny red candle feels like the start of a massive crash. That anxiety leads to poor decisions. You second-guess your initial analysis and manually close a valid position, only to watch the price immediately reverse and hit what would have been your profit target. Those tiny, erratic movements are what traders call market noise. It hides the actual direction the market is moving and systematically wears down your confidence. Imagine putting on a pair of glasses that automatically blurred out all those irrelevant wiggles and only showed you the significant structural moves. That is exactly what the zigzag indicator does. It takes a messy, chaotic candlestick chart and strips it down to its underlying skeleton. By applying this filter, you replace the anxiety of staring at random price ticks with a clear, readable map of the market's true direction. This diagram shows how the zigzag calculates its path. Unlike a moving average, it ignores time and minor ticks. If the price bounces around within a tight range, the indicator does nothing. It only draws a new line when the market moves by a calculated percentage or pip threshold. You control that sensitivity using 3 specific settings on your trading platform: depth, deviation, and backstep. Let's say you're trading the British pound and you set your deviation dial to 100 pips. If the price drops 50 pips, the zigzag ignores it. The line stays locked exactly where it was. It will only snap down and draw a new leg once the price pushes past that mark and reaches the full 100 pip threshold. By dictating exactly how far the market has to travel before it registers on your screen, you effectively delete the visual clutter and isolate the major swings. If you spend enough time on trading forums, you will inevitably find someone claiming this indicator is useless because the final leg repaints. Repainting simply means the last leg of the line is dynamic. As this animation shows, if a trend continues to push higher, the zigzag will extend right along with it. It won't want locked into place until the price reverses by your specific deviation settings. People get frustrated when they try to use that moving line as a trigger to enter a trade in real time, but the tool is designed to be a historian. It maps out confirmed battle lines from the past so you can see the overall structure. In a standard uptrend, the market will consistently create a stair-step pattern of higher highs and higher lows. This diagram shows how the zigzag clearly outlines that upward structure. It filters out the minor pullbacks, leaving you with an objective view of the progression. You know the momentum is stalling when the indicator fails to reach a new peak, printing a lower high. And the moment the next leg plummets past the previous trough, the trend is broken. Institutional traders refer to this specific visual sequence as a change of character, or chach. Waiting for the zigzag to explicitly map a lower high and lower low stops you from mistaking a routine dip for a trend reversal. You only react when the actual geometry of the market shifts. When traders use the Fibonacci retracement tool, they usually end up staring at a cluster of candlestick wicks, guessing which specific high and low points they should use to anchor their grid. In this animation, we resolve that problem by snapping your Fibonacci tool directly to the sharp, mathematically confirmed corners of the most recent zigzag high and low. Without those firm anchor points, it is incredibly easy to nudge your grid up or down just a few pips, so the retracement levels line up with a trade you already want to take. Letting an algorithm select your peaks and valleys removes your emotional bias. It forces you to anchor your secondary tools using strict, objective rules. Combining zigzag with a 50 EMA, we only buy when price is above the average. Place a buy stop above the last confirmed peak. Put your stop loss below the recent zigzag low. Set your target twice that distance for a 1-to-2 ratio. Open your demo account, load up your favorite currency pair, and apply the zigzag indicator. Don't look for entries yet, just watch how it calculates the major turning points over time. When you stop reacting to market noise and let the lines define your playing field, you trade chaotic guessing for a highly objective roadmap.